as you're talking to investment advisors, was the role of alternatives? What does it play in an asset allocation perspective? What does that look like from your lens?
The adoption rates of advisors coming to alternatives are continuing to increase. And I think if we just look at things from a 30,000-foot view, we really feel that alternatives can satisfy three main objectives. So, and by understanding what those three main objectives are, we then can understand which is the maybe more appropriate asset, although all three categories, meaning hedge funds, private equity, and private credit, could be applicable. So those really three parameters are identified by having an investor or investors that have as objectives to say, I want to mitigate risk. I want low vol. I want those shock absorbers in the portfolio. It's fun to get on a roller coaster like equity markets provide from a volatility standpoint. But, after a 2-minute ride, I want to get off. Right. So for an investor that's talking about those personal feelings, that's really where hedge funds and a handful of low vol strategies, whether it's multi-strat, equity market neutral, relative value, that is where those strategies really fit the bill. Then if you're looking at an investor who says, well, I really want to take advantage of growth. And investors can certainly look at public markets for growth. But over the last few years, we've really seen 7 companies, technology focused for the most part, carrying the S&P. And in addition, since just 1996, we've seen close to 50% less available entrance into public markets or available investment opportunities for investors within public markets. So you have a shrinking public market, you have an ever-growing private market, and it would seem that the potential for growth opportunities should take advantage, or the investor's desire to take advantage of growth opportunities should have exposure to private markets and from a private equity or leverage buyout or venture capital or growth equity. So equity being the operative word, and in the private markets. And then the third element to consider is an investor's need for income. And really that depends on their life stage. Many investors look to public fixed income, but there's also the ability to gain that yield, that income component at a premium to traditional fixed by using private credit managers. So by having all three of those elements, that's really what those are the kinds of conversations we're having with advisors on a day-to-day basis.